Spotify reported record audience growth for the second quarter, but its stock fell 14% on news that its podcast division was still suffering from weakness in the digital ad market. Results were even worse at Snap, which posted its second consecutive decline in quarterly sales and also saw its stock decline 14%. That's in contrast with Google and Meta, which posted advertising revenues that topped analyst estimates. Scott, why are these results so mixed?
Well, it's just really good to be an unregulated monopoly. And that is, look at the company that dominates search, look at the company that dominates social, look at the company that dominates software, and all of those companies had huge quarters. And then look at the company that's super innovative, great product, great management team, great founder, but they're subscale and the oxygen is being sucked out of the room. So Snap is one of those companies. Snap is sort of, in my opinion, exhibit one for why we need to break big tech up. It's a great company, and it just can't compete with these monopolies. Because what you have is people who are in charge of digital spend just say, all right, we're just going to give it to Google and to Meta because they control everything and they have the money to invest in better ad tech. And the smaller guys just can't compete. So Snap fell 14% after reporting Q2 earnings as investors reacted to weaker than expected guidance. The revenues declined 4%. Their net losses narrowed to $377 million. It's still very dependent upon digital marketing spend, which has declined over the past year. The U.S. advertising market is expected to grow 6% in 2023, lower than the 9% growth seen in 2022, although digital marketing is just being, when you're growing your revenues top line by 12%, such as many of the big tech in media, and the market's growing 6%, that means that someone is declining in revenues, and Snap is one of those folks. There are some real bright spots here. Daily active users at Snap reached 400 million, up 14% from a year earlier. And over 150 million users sent more than 10 billion messages to Snap's AI bot. So in sum, and this is kind of the prediction here, something's going to happen, I think, with Snap over the next 12 or 24 months. Now, the reason why this prediction is less certain is that it's one of these dual-class shareholder companies, and one person, Evan Spiegel, controls that decision. It would be the right decision. This is a great product, a great company with a subscale platform. It should absolutely be tied up with a bigger platform. But he gets to make the decision. And unfortunately, founders are often already billionaires of these companies. So if it's a question between being worth, $2 billion and $4 billion, he'll probably opt for the $2 billion and maintaining control. Control is an addictive substance. But this feels to me like a company that should be part of a bigger company.
So who comes in and buys it, do you think?
Well, I think the logical one would be Disney, whose market cap is around $160 billion, and Snap's market cap is $17. And you can imagine that Disney says, all right, our traditional channels of distribution, movie theaters and broadcast cable, are in structural decline. What if we could directly communicate with 400 million younger users who advertisers love and start pushing through snippets and IP and movies and series to Snap? I think that could be really intoxicating, and also market all of our properties across those 400 million users. The brands feel good to me. After Bob gets done cutting costs, he's going to have to come up with a growth story. And at $17 billion, this company, keep in mind, the stock's at $10. It was at 85 at some point in 2022. That was obviously wildly overvalued. But it's at $17 billion, so it would be about a 10 or 15% dilution to Disney. Feels very brand on. They get 400 million younger users that are very much congruent with their products, and they would get a new channel of distribution for their IP and their content. The other outside shot would be Apple. The brands line up perfectly. I think Evan would be very successful at Apple. They could obviously blow this thing up by featuring it on the front screen of every iOS product. The thing is, Apple is not acquisitive. They think they're so correctly precious about their culture. They don't like to make large acquisitions. But the thing about it is, when you're talking about a company with a $3 trillion market cap, they could pay a 50% premium for the company, and it would be a 1% dilution. They would have to issue less than 1% of their shares to pay for this acquisition, even at a 50% premium. And if the thing didn't work, if the thing was a total disaster and a write-off after 2, 3, 5 years, I mean, the real cost would be the diversion of focus, but it would mean nothing. I mean, they could acquire Snap and pay for it with just change they find in their couch. But so it makes sense on a lot of levels, except they're just not that acquisitive. So I would think it might be Disney, or there might be an unusual deal. Iger said he wants to get rid of FX, and I think it was ABC. Maybe he spins it to Snap, and Snap becomes kind of a interesting media play for young people and starts running the content of those companies through their Snap platform. But my prediction in sum, Claire, is that something happens with and around Snap over the next 12 months. It's just subscale, and something needs to be done here.